So you are a first-time home buyer and you want to know about down payment assistance programs that are out there, specifically here in the Las Vegas area. Well, you are in luck. In today's video, we are going to be talking about 7 things you need to know about down payment assistance programs. And I brought on a good friend of mine. He's a lender here in Las Vegas, and we're going to go over those 7 things. And as we always like to say on this channel, let the show begin. Oh, wait. And speaking of shows, the reason I am in my wonderful cowboy giddy up, we're going to see Beyonce tonight, Cowboy Carter. But as I was saying, let the show begin because we're getting after it right now. Okay, guys, so we're out of the heat. We're inside now. We're safe. I am joined with my good friend Ryan Olson here with All Western Mortgage. We got a Western theme going on today, so it's really interesting. So with All Western Mortgage, he is going to be our expert. He is our expert in regards to mortgages here in the Las Vegas area. Do you work outside of Las Vegas or in other areas?
Oh, absolutely. Mainly Las Vegas, but I'm licensed in 8 different states, mainly around the west part of town or of the U.S., hence the Western. But we're licensed all across the U.S. and about like 43 states or something like that. Excellent. So we can help in any one of those.
I like it. All right, guys. So we're going to jump into the juicy stuff. You guys want to know in regards to what's happening with these down payment assistance programs, and stick with us because number 7 is a really juicy myth that's out there that's stopping a lot of people getting into home ownership. So stay with us until that end. So with that, Ryan, let's just jump right in. If you want to introduce yourself quickly, and we'll start with number 1 after you do that introduction. But Mr. Ryan Olson, my friends.
Yeah, thank you so much. I'm a mortgage loan officer located in Las Vegas, but like I mentioned, I lend in multiple different states. I've probably helped at this point. I don't know what the exact number is, but I think I've probably broken over 1,000 people helped with home financing. So I've seen every different kind of scenario, help people with purchasing their primary home, which is the most common, but help people purchase investments, second homes, things like that. And so, hopefully I can provide some good info here on the down payment assistance programs that are available. And like you had said, we have 7 different tips. And I think probably what would be important for me to do initially is just kind of explain what a down payment is. So a lot of people will know what that is, but I can just briefly kind of go over what we're talking about, what we're actually assisting with here with these programs. Okay, so if you want, I can share my screen real quick.
Please do that.
And just go over one slide. Let me find it real quick. Here we go. And these are the most common loan programs, conventional FHA, VA. There are many other loan programs, but these are probably 90+% of the loans that are funded throughout the U.S. are conventional FHA, VA. Now, this is all based on buying your primary residence, meaning you're planning on living in the home. But if you're using a conventional loan, which is the most common loan program, you could put as little as 3% down if you're a first-time buyer. If you're not, if you've owned a home in the last 3 years, you'd have to put 5% down. So, meaning you would have to come out of pocket with that amount, that percentage of the home price, and then you can finance the rest with your mortgage loan. FHA loans, those are common for like maybe a little bit more blemished credit, and they're a little less strict on income, things like that. So they're a little bit more lenient. Those require minimum 3.5% down. If you're a veteran, active or previous military, or if you're a surviving spouse of military, you can often utilize the VA loan, which allows 0% down, in which case you may not even need to utilize down payment assistance because it's not required, but it still could be helpful for VA loans. So I just wanted to kind of preface that because, the programs that we're talking here are things that would come up with these funds for you so that if you don't have the funds to put your down payment, this can assist you.
Good. And thanks for that, right? And then, guys, I think that's a great explanation in regards to helping people understand. And if you have even more questions about what is a conventional, what is an FHA, what is a VA, we're going to have Ryan's information all in our links down below, all that kind of good stuff. So you can reach out to Ryan, you can reach out to myself, and you can get much more clarity in regards to any questions that you may still have about the video. But with that being said, Ryan, let's jump into these tips so these people can get their notepads and pens ready to go and reach out to us when they're ready to buy.
Certainly. Okay, so the first tip is it's a good idea to know your local program. So we're kind of mainly focused here today on the Las Vegas market or Nevada in general. And the most common one that a lot of people have heard of, and the most common program that I use is called the Nevada Home is Possible program. Now, there's many different tiers of that program that can be used depending on your income and the type of property that you're earning and your family size, or excuse me, type of property that you're purchasing and your family size and all that. But there are several different resources that can be available with this program. Basically, that gives you up to 4% of your loan amount towards your down payment. So, in short, that basically covers all of your down payment on that minimum 3% down, minimum 3.5% down for FHA, and a small chunk of closing costs, which we'll get into later. But so that program basically will cover your down payment. Now, the minimum credit score for those is typically about 640. You can use it for the FHA conventional. You can technically use it for VA, but you probably wouldn't need to. And so that's probably the lowest hanging fruit that we go after is that program. It's locally provided here in Nevada. And so there are certain lenders that offer that program. We're obviously one of them. And so that's probably the program that we look at first for home buyers who need to use down payment assistance. One other quick thing on that is some down payment assistance programs, it'll be an amount that's given to cover your down payment, but you have a monthly payment on that. It's kind of like a secondary mortgage payment that you're slowly paying that off. This program specifically does not require you to make any monthly payments on it. It's called what's called a silent second. So it does have it is an additional lien or loan against your home. But you don't have to make any payments on it. There are some restrictions where if you pay off the loan in a certain amount of time, if you sell your house or you pay off your initial mortgage loan, you have to pay that back. And there are different requirements for different tiers of that program that require that. But yeah, the nice thing is there's no payment on that assistance that you're obtaining.
That is huge, and that's very affordable, especially with so many people out there. We know there is some housing affordability going on here in Las Vegas for people that are entering, especially their first level entry home. So that's a really huge savings. So I hope you guys really heard that. Rewind the tape if you need to a little bit, listen to them again, but great information there. Thanks, Raf. I appreciate that. And then thinking about our tip for number 2, what do you think our tip number 2 would be for them?
So tip number 2, one other thing I should have mentioned on the first tip using that Home is Possible grant, there are some income limits for that program. So sometimes that's a stopping point for home buyers, especially if like you're, one or two or 2 or 3 income household. That could be a potential stopping point where you can't use the Home is Possible program. So that's not the only program available. We have some really good in-house programs that are available as well, meaning that it's not provided by like a state entity or something like that. We provide it at All Western Mortgage. The specific ones that we have are tailored more towards the FHA loan, where that FHA loan requires 3.5% down, and our programs will give you those funds to cover that down. Now, there's two different ways.
Sorry, right to interrupt. And this is our tip number 2: is that you guys do have those in-house programs. It's not just out there, but you specifically can have. So check with your lender, like Ryan, and he'll tell you about these programs. So continuing on, Ryan, my apologies.
Correct. Yeah. So we have a couple of different ways we can go about that one. Some of the main reasons you would go with that, again, is the income limits that are in place on the Home is Possible grant. Another reason you might use that is because those programs that we have in-house are a little less strict on credit scores. So I've gotten people approved on our in-house down payment assistance with as little as 580 score, whereas that Home is Possible requires 640. And by the way, too, even if let's say you're close to 640 or you want to get there, we have resources to help with that as well. But the in-house ones are less strict on credit, and there's not any income limits on some of those programs that we have. And so that can be a really good option. If you've been denied by a lender due to your income or credit, it might be a reason to check back with us to see if we can help you with some of our other additional alternate programs.
I have seen you do some miracles, my friends, when we've had people that haven't been able to move forward. We've been told by other lenders they can't move forward. We send them over to you guys and just say, do we have a Hail Mary here? And you guys perform. And so I've seen that. So thank you for that. So again, guys, don't only think that what's out there is what you can use. Talk to Ryan, talk to other lenders in the sense of making sure you understand they may have some in-house loans that could work for you. Anything else on that before we move over to tip number three for them?
I think that pretty much covers it. There are some different specifics on those programs that we have available, but generally speaking, that's what it provides: 3.5% down to cover your FHA down payment, no income limits, and the minimum credits is potentially 580. But we still need to plug your exact scenario into that, into that program to see how you would best be able to take advantage of that one.
Understandable. Good, good, good. And then moving on, tip number three.
So that's understanding your credit score requirements. And what I would say on that is, when we say 640 credit score for that home is possible, or 580 for this other in-house one that I was referring to, I wouldn't, like, if you're under that score, I wouldn't just kind of write it off, because a good lender is going to help you potentially improve your score. Like, sometimes we'll see people that are at 600 and they want to use that home as possible grant, and maybe we could put together a roadmap where maybe it's short term, or maybe it's over several months. Sometimes it's as little as a few days or a week. Sometimes it's a little over several months, where we could put together a plan where we say, do this, this, and this on your credit, and we could potentially have your score up above the 640 by this date. So I wouldn't say, if you have blemished credit, or you're worried about your credit, don't let that be a stopping point. Like, let the lender look at it and see what we can do to improve the score.
Yeah, for sure. When people reach out to us, sometimes, they've gotten over that fear of what is my credit, because so many people don't look at their credit. They just don't know where they are. They're afraid to look at it. People come in with some really low scores, and we've been able to help them. And like you said, put together a plan. And then a few months later, 4 or 5 months later, 3 months later, or a year later, sometimes for some people, who knows, we still have been able to get them into home ownership. So I definitely agree with you on that one. So.
Yeah, and I think people fall into a trap, because you could go to a lender, especially some of these cookie cutter lenders, and they're like, your credit score is too low, and that's it. That's the answer you get.
Yeah.
And you need down payment assistance, and you need to improve your score, but you don't have a roadmap to do that, right? So I feel like some of these people may never ever get into a home unless they have some guidance that will help them get,
Right.
determine exactly what they need to do. So that's one thing that a good lender will provide to you, is a roadmap on what you need to do in order to get your score where it needs to be.
Okay.
Another thing too is, when you look at like Credit Karma or some of these credit monitoring, like when I look at my Wells Fargo and all that, that's not necessarily using the correct scoring model that is used for your FICO score, that's used for your mortgage. So I wouldn't just, I would take that with a grain of salt, and have your lender pull a official copy of your credit report that shows the FICO score. And then that's basically the blank canvas to start from. If your score, and sometimes people score it, they think it's too low because they saw in Credit Karma or whatever. We pull it and their FICO score is actually higher, and we're like, no, you're good to go now. So
Right.
that happens sometimes.
Yeah, yeah, yeah. Get to the reality. All those apps they're cool. It's almost like us with Zillow's. Like, Zillow's out there, it gives you some information. It doesn't really give you the value of your home. You've got to check with the professional. You've got to reach out to myself. You got to reach out to Ryan, and let's get you to the reality of where you are. Even if that reality is it isn't ready right now, but like Ryan is just saying, we're going to put a plan together to get you ready. And like Ryan also just said, we may check your score, and all of a sudden you are ready, and you just don't know it. It can happen. So reach out to us. Reach out to Ryan. Tip number 4, my friend.
So the fourth tip is to don't make any assumptions about those income limits. There's different income limits. I won't sit here and bore you with a breakdown of each one, because it depends on your family size and the specific program that we're using within that home as possible program and all that. But don't make assumptions, because we have to calculate your income a very specific way. So, like, what you make, and you might kind of divide your annual income by 12 and all that. But we have to calculate your income based on your base pay, if you get any commissions, overtime, bonus, and all that. And your income may fall within that limit when you didn't think it would. So, like, it's the income limit is based on the official calculated income that we have to do per loan guidelines. So I wouldn't make any assumptions on what your if you fall into that income limit or not, until you talk to a lender and have them calculate it for you.
Exactly. Yeah. Biggest thing I keep hearing from you, my friend, and I definitely agree. We've got to reach out to the professionals that are doing this every day, that are closing transactions, that are helping people get into homes, and let us help you get to the reality. Because what you may assume is going on with your Credit Karma and all this other kind of stuff is not what Ryan is going to be using, and it's not what we're going to be approving you with, or Ryan's going to be approving you with, and all that kind of good stuff. Reach out. reach out. Throw questions at us. We'll help you guys out in that sense. So thanks, Ryan, for that. And then number five, this one's a good one here.
Yeah. So one thing in this market especially is don't forget about the option to obtain seller credits. So just hearing that, you may not even know what that means. So specifically, what seller credits can do for a buyer is they can help contribute towards closing costs. So, if you don't buy a home every year, which most of us don't, you wouldn't be familiar with, all the stuff that's needed, all the funds that are needed in connection with purchasing home. So the down payment, which we've gone over, minimum 3.5%, all that, that's your skin in the game. Basically, that's what you're putting towards the purchase of the home. You're basically paying that to yourself. When you buy a home, you also have closing costs. As a buyer, things that are typical for closing costs are like lender fees, title and escrow fees, appraisal fee, government recording fees, sometimes HOA fees, first year homeowners insurance, prepaid property taxes, I'm leaving some out, but as a bulk, they can be several $1,000s. So maybe you have the down payment assistance to cover your down payment, but you don't have several thousand to cover your closing costs. Well, in this market, where especially in Levert, you can speak to this better than me because you're the one that negotiates these things with sellers and listing agents. But maybe you're making an offer on a $300,000 house. You're using the down payment assistance that covers your down payment, and you say to the seller, or Levert writes up your offer to the listing agent and the seller, and they say, okay, we'll offer 300,000, but we also want a seller credit of $10,000 or $9,000 to go towards the buyer's closing costs. So in that case, you could potentially get a credit large enough from the seller. Basically, at closing, that comes out of the seller's proceeds of the sale, and it just gets applied towards all your costs due at closing. So there are a couple of small fees that you have to pay out of pocket, like an appraisal fee and an inspection fee. But generally speaking, when you get a down payment assistance to cover your down payment and you get credit from the seller to cover your closing costs, there's been many times where we've seen buyers come out of pocket with like less than $1,000 by the time they get to closing. To cover maybe their, again, appraisal fee and inspection fee. So that in this market, and again, you can speak more toward this, but in this market, we're seeing more availability of seller credit. So like in a real hot market, let's say you love a home and you go make an offer and you find out five other people have made offers on that home and you're asking for a $9,000 seller credit and these other four are not, you're probably not going to get it.
Right.
But in this market, it's much more available. Again, you could speak to that because that's kind of your realm. But so that's a real opportunity right now where you can get those credits to where you could come out of pocket with very little money for your home purchase.
Yeah, 100%. And like I said, I really like this one because most people do not realize that we can get you into a home. I'll be writing you the offers. I'll be writing those offers. We'll definitely go in and we'll strategize what terms we're going to put into that offer based upon, like Ryan was just saying, what is happening? What's the environment around this particular home? Are there multiple offers? Are we the only one going in there? But at this particular time in this current market, sellers and builders are definitely still assisting our buyers getting into the house. And when I say assisting, meaning they are contributing towards their concession costs, their closing costs, all of those different types of fees that you may have, we are getting our buyers some of those things covered. And you don't have to bring that stuff to the table. Like Ryan said, some of them have done $1,000 in some situations. Now, I haven't seen many $300,000 scenarios, but those are probably going to be more towards your condos, your townhomes, and those different types of things. Here in Las Vegas, our median price is probably more around that 465,000, 400, whatever that may be. It's at that number. Most of my clients are probably closer towards the 600,000, but we are helping everybody in every different level. We just sold two townhomes last week for our clients. One of them was like for $295,000. Another one I think was under 280,000. So we're seeing them out there. It just depends on what product you're looking for. But the median home, single family home here is going to be more towards that 465, even a little bit higher, maybe 470, whatever it may be right now. But again, we can get sellers to contribute, put money in your pocket so you can get into a home. So good stuff there. And then moving on from that number five, number six, we're working our way up to that number seven, guys. We're almost there. It's that big myth that's out there. But number six, right? What is that one for?
So this piggybacks off what we were talking about, and that's to really try to shift your mindset about timing. So there's no perfect time to buy. A common phrase that we use in real estate is time in the market is better than timing the market. Meaning you're always you're not probably, you're always going to win long term in real estate. Just historically speaking, home values increase what, an average of 4 to 5% per year. But people want to wait for rates to go down. So that's a common one, right? Well, I'm going to wait for rates to go down. We've seen a little bit of improvement in rates over the last coming months, or over the last several months. Nothing crazy. What I would say on something like that is we see little mini shifts in rates, and we see little mini shifts in markets right now. So like a lot of the times when we see these opportunities where maybe there's more inventory, there's more opportunity to get a deal on a home and potentially get a credit from the seller to help cover closing costs. Like in the last few years, we've seen these kind of disappear quickly. So if rates do start to improve, which there's a lot of economic factors that come out on a weekly, monthly basis, daily basis that can affect mortgage rates. So there's really no prediction on if and when rates will improve. But when we do see those little mini shifts in rates, that's when we see kind of these opportunities frankly like disappear. So, all of a sudden we were in a market where you could get these credits from sellers. You weren't dealing with so much competition. And then it could be rates move a 0.5% or something very, minimal. And then that floods some buyers into the market. And now you're right back to that competition where now those seller credits, you're not seeing them anymore. So it really is true. Like we don't know how long that opportunity is going to last, where we do have a little bit more of advantage for buyers right now. Um, and that allows you to get a little bit better deal right now. And long term, you're going to be gaining appreciation each year. So like if you could save money and get into the home right now and get a credit for your closing costs, I just personally think that it's like one of the most it's something that's not talked about enough in the real estate market right now.
Exactly. I would agree with you. I think the biggest thing is like you're saying, it's just this mindset of it all. There's a lot of people that just don't believe they will ever have home ownership. They just don't think they will ever be able to afford home ownership. Yeah, prices are higher than they have been before in the past, but that's because the value of your home is going up in aggregate over a long period of time. You're going to get price increases. You may get pricing decreases as well 1 year, then all of a sudden it goes back up and catches back up over the next year. But again, like Ryan is saying here, we can't time the market. We just can't time the market. People sitting back trying to time the market, you waiting to hear what the media is telling us about what's happening with, oh, this is the right time to buy. When you hear it's the right time to buy, everybody else that's been waiting on the sidelines, like Ryan is saying, is going to jump into the market, bring that competition. And what do you think is going to happen with price at that point as well? If more people are in there demanding and wanting more of the properties, prices are still going to go higher. That's the reason we're able to maintain prices right now, because our inventory, even though it's growing, it is still lower than we've seen in the past. We still have low inventory, so that growth isn't really there yet. We just have a maintaining of pricing, but the bottom line is reach out to us. Let us help you with whatever the scenario is, that we'll put that game plan together, and then we'll be able to help you get into home ownership. So don't let the media scare you. Just look at your situation. Have you worked your tail off? Have you put the money aside? Have you reached out to the professionals to get a game plan together and all those kind of great things? And then from there, shift that mindset into, no, I'm going to be a homeowner in this country. So be a homeowner. So number 7, we've been waiting for it. Number 7 is the juicy one. We sort of kind of hinted a little bit throughout in these tips about it, but number 7, here it is, guys. Tip number 7, Ryan.
Yeah, this one won't come as a secret based on the other things that we've mentioned, but it's just such a big myth that's out there. And that's that you need 20% down to purchase a home. So you can, like we had mentioned here, you could put as little as 3.5% down on FHA, 3% down for first time buyers on conventional, zero money down if you qualify for a VA loan. One thing we haven't thrown out there, but if you're in a low populated area, you most likely will qualify for what's called a USDA loan, which there are some places around the Vegas Valley here that qualify for that, which you could put the USDA loan allows zero money down as well. So, sometimes there are advantages to putting 20% down if you have the funds. Most home buyers don't. But you do not need 20% down. And most buyers, a lot of the times, people who have 20% down available, I'll give them tiers. Like here's if you put 5% down, 10% down, 20% down. Some of them just choose to put, less down anyway because they'd rather keep the money in the bank. So that's just a myth that could really hold a lot of people back. They're like, I don't have anywhere near 20% down, so I'm not even going to look into my options. But like I had mentioned, you can put much less down and then you can get assistance to cover those things for you.
Exactly. Good. That's a huge one, guys. And like you said, right? Yes, we've heard it before, but I want to keep reiterating because sometimes we need to hear things like 6 or 7 times to really hear it. Hopefully, this is your seventh time hearing this. You do not need 20% down. You can get into a home. You can get sellers still helping you right now, giving you money back into your pocket. These DPA programs, these down payment assistance programs, this can put money in your pocket as well. There is so much help out there in regards to you getting into home ownership, but the media loves to keep us out there in that fear of not being able to attain it and everything else. There are ways around it. Think of yourself like water, my friend. Get around these obstacles. Reach out to us. We'll help you. We'll get you through these obstacles in that sense. So with that, before we let them go, anything else you want to add to it, Rye, before we wrap this all up for them?
I would just kind of end it with just helping people understand that everyone's scenario is different. So all these programs have specific requirements, but no two scenarios are the same in home purchasing and when we look at home lending. So the best thing that you can do is just get pre-proof your home loan. And I think a lot of people are scared to do that because maybe they're worried about, their credit not being good enough or that their income's not going to be good enough or that the lender is just going to harass them and kind of be like, one of these like really pushy salespeople. But the best thing that you can do is obtain a pre-approval from a lender and talk to a lender, have them get your basic info. A good lender will very thoroughly review your scenario and can quickly get you answers. And then from there, there's no obligation for you to do anything. But that way you can have exact answers on what programs you might qualify for, how much you'd have to put down, how much down payment assistance you have available, what your monthly payment would be, all that important stuff that you need to know, and you'll just be educated on your options. And then from there, you can decide to reach out to, reach out to Levert and start a home search, or you could say, okay, well now I know where I'm at, but I'm not quite ready yet, but at least I know what's ahead of me if I do decide to purchase the home later on. So I would say that's the biggest thing is you just need to get with a lender and get detailed answers on this stuff because like you definitely don't want just general info on your exact scenario. You want exact answers for your scenario.
Exactly. And that general information is usually called a pre-qual. We want specifics. We want your
Hmm.
work in. We want the lender understanding exactly what's happening with you. We want your taxes, all the kind of stuff done. And we want you pre-approved when we write off.
Hmm.
We want you pre-approved. So with that, guys, thank you for your time. Please share this video with anyone else that you may be thinking of purchasing right now that may need assistance in regards to what's happening here in Las Vegas. If you need more information, reach out to us. Our information is all down below. Like the video, subscribe, all that kind of good stuff. Do you have a channel as well? We can maybe point them in your direction, or how can they reach you on?
Yeah, I'm just slowly starting to build that one. But Ryan does loans on YouTube. Kind of posting more on there. There's some of the initial videos I posted in the last couple of months. Also give a really good overview on just all the things you need to know to buy a house. In the current market as well.
We'll put all of Ryan's socials down in the bottom as well, all that kind of great stuff. But again, guys, thank you for your time, and we will see you in the next video. Here comes Beyonce. See you.